We've been working with you guys now for about 16 years.
Yeah.
And I think we've done more than 1,500 reports over the years.
Which is amazing.
Well, yeah. So you guys have been around for a long time.
Yes. Well, asset finance, in fact, has started, I think it's coming up to 25 years they've been going now.
Yeah, and you've probably seen a lot of them come and go over the years.
Oh, I personally, I mean, all over. I probably in total have been in this industry now for just shy of 20 years.
Yeah.
And yeah, I mean, asset finance, I met with one of probably the largest developers who had built most of the high rises on the Gold Coast Strip here this morning.
Yeah.
And it was interesting that this particular gentleman said, he said, well, I've come back to asset, come back home, if you like, was his words, not mine, because I've been around for such a long time.
There've been quite a few things with COVID, and that's obviously affected the market quite a lot.
And it's been amazing because, like most people in the marketplace have thought, oh, COVID, doom and gloom, the world's going to end, the property prices are going to drop and all this awful stuff. It has been completely the opposite.
Yeah.
Completely the opposite. I mean, there was an interesting fact that I'd heard over the last week or so that, and I think it was more so the Queensland State Government had announced, there's something like supply-demand scenarios. There's something like there are 100 properties short per week of what they need to build versus the amount of people or houses they've got for people to move into. They're 100 short of where they need to be. And consistently rolling forward, 100 short every week, supply-demand.
Wow, and you're targeting people, investors from Melbourne, Sydney.
And what has really boosted the market, probably more so in southeast Queensland, with the state grant in terms of first homeowners, federal grant. So with those two and a lot of builders offering incentives to bring first homeowners into the market, it has been a huge explosion, which of course developers by nature, supply demand, they push the prices up. Then you have a lot of people from down south that are thinking, well, our property prices that are a premium down there, worried about what's going to happen down there, we're probably thinking of moving to a warmer climate over the next 10, 15, 20 years. We're going to bring those plans forward.
So from a mortgage background, finance background, how difficult is it now for getting finance? Is it becoming more difficult?
People ask me that personal friend all the time. Probably the number one question I get asked. Oh, it must be really hard now. Not at all.
Yeah.
Not at all. I mean, there is a couple of little questions, obviously, based around COVID that they will ask prior to settlement to make sure that you haven't been affected financially. But apart from that, I mean, the banks are still lending money. If you're an investor, you can borrow 110%.
Yeah.
First home owner occupiers, 95%.
Yeah.
And then capitalise the mortgage insurance.
Yeah.
There's people, as I mentioned, with certain developers and builders offering big incentives. Hence the explosion here, where for $1,000 down, and with the grants and a bit of contribution from the developer, people are able to get into their first home.
What?
For $1,000 down.
Wow. And
we did hundreds of them in this office last year and still doing them now.
What sort of stock is that?
All 4-bedroom, 4-bed, 2-bath, double lock-up, garage.
And the rental yields on that sort of stuff?
For the investment side of things, excuse me, purchase price, let's say an average of 500, if they were to rent those, they're pretty much dollar for dollar.
Yeah. And I guess when you include all the depreciation benefit, it's a huge cash flow benefit to them.
Oh, from an investor's point of view, probably, I know myself and a lot of my colleagues that I work with now and have for the last nearly 20 years from the investor side, honing in on that side of things, they're pretty much all cash flow positive.
Yeah.
And interest rate. But the big thing is, which is when I again come back to the seminars with investors, harping on about the tax benefits of owning an investment property and making sure that you're utilising those to get you where you need to be. Don't let the government keep them.
Exactly, yeah. And you guys have been doing this for 20 years or so, advising on depreciation over that time. Maybe that's why you guys are still around and the others have closed down. Yeah.
Well, they don't be, yes, we say we're a mortgage broker, but we're asset finance services. We've got a holistic approach to, yes, we don't just get you a mortgage, but we make sure that you get your depreciation schedule by the help of you guys from Koste. We make sure they get that's prepared correctly so they can give that to their accountant, get that tax variation done so they're collecting those tax benefits up front, pay their mortgage down and help them in the long term get to where they want to be.
And you know, on our Koste website, we try and do a lot of the education on there, and we have got checklists on what you can be claiming for. You know, right away from the bank interest
Trigger
to pest, and
oh wow,
you know, gardening and so forth. A lot of those areas people actually forget about, or it's just too hard to pull together the costs, or what, you know. But with a good accountant,
on pool pumps and lights,
yeah, exactly.
What I can claim, the floor that I'm walking on, depreciation. People don't, it blows their mind to what you can actually claim.
And you'd be surprised, actually, we do, you know, look at different depreciation schedules, how different of opinion on the way stuff is produced. Not that I'm knocking any quantity surveyor.
Of course,
you know, I encourage as many people as possible to, you know, even if it's not 100%, just get the figure so you can include it in your tax return.
At least get something back.
At least get something back. Yeah, exactly.
Nothing grinds my personal gears more when I know that somebody's had an investment property for 12 months and I say, is it brand new? And they tell me they're only getting $800 a year back off their tax. And you say, what do you earn? Oh, jointly we're on $140,000 a year. Huh?
Yeah.
Have you had this done? Have you had a proper, oh no, the accountant just worked out, did a quick summary off the build contract.
Yeah.
No, bring these guys, get it done properly.
No, exactly, and we can go back a few years, but unfortunately we can only do the amendments the previous 2 years.
Okay.
So, you know, those who have had property for 10 plus years, you know, they've already lost a lot of depreciation, but again, it's all about education, you know, still entitled to it, so it's never too late to get a report.